And let's try and understand what could be the repercussion for the equity markets as well. We've got Prashant Khemka joining in. Prashant, hi, good morning. Thanks for your time today. And really, it's been a cowardly attack by Pakistan that we've seen, Prashant. The Indian Armed Forces' very proportionate response has negated Pakistan's bid now to escalate. Pakistan intensified firing along LOC. They met a similar response last evening. The jointness in Indian Armed Forces has scripted success so far, at least, I would say, Prashant. But yes, we also saw the VIX spike up about 11% just yesterday itself. The markets did close in at the day's lows. History tells us that this is just at best a knee-jerk reaction. The equity markets will dust it off and pick it up again. But what are we staring at this time? Because from what I see, Prashant, the GIFT Nifty is a little shaken up. It's down a good 200 points right now.
No, certainly, Aisha. See, situations like these do cause uncertainty for the markets. And as an Indian, certainly our prayers and thoughts are with the soldiers who are at the front in the midst of the action. But as far as the market is concerned, it is going to be fast evolving situation over the coming few days. How the situation develops from here, the market's going to react. Globally, most such, and in India, at least over the since Kargil war, at least in 99, there have been a couple of instances which have de-escalated within a few days. Now, this one seems to be a little more intense than those couple of instances, and remains to be seen how long it takes. But the market would tell us ahead of any other news or any other um, um, source how the situation is, and 1% down yesterday, about a percentage point down today, at least seems to suggest that the market doesn't believe at this point in time that this is going to get out of hand.
All right, Prashant, but given the fact that there are tensions across the border, but the fact is that the FIIs are indeed showing resilience. And for the past 2 to 3 days, when there was a bit of nervousness that we were seeing, the index did not perform that well. But in the cash market, the FIIs have been showing some resilience. Given the tensions across, what kind of a sentiment can we see building up in their positions? What's the stance and what are you picking up?
So the FII position can turn on dime. It can turn very quickly. Yeah. So they have also been of the opinion it'll be a function of what the market does. The market has been resilient over the last couple 3 days, and so that has also given confidence to the foreign investors that this is nothing significant, nothing different from what has happened over the last couple of instances, and hence they've not really been bothered too much about. They're asking the questions, but they aren't acting necessarily on it. But if the market were to react negatively, then they would become more nervous, and you're likely to see that in the FII numbers.
But Prashant, market is a forward-looking beast. Today you are seeing a knee-jerk reaction on the GIFT Nifty, but who knows, maybe by afternoon we cover all this of a downtake. But eventually it's going to come back to basics, right? It's going to come back to what happens between Trump and China, how they maneuver on tariffs. We've already heard very good news coming in from US-UK last evening. I know it got completely ignored because of this India-Pakistan situation. Tell me, what are the key triggers that the market are going to be working with? And also, we're in the midst of earnings season, and it's been largely in line, besides, of course, a few misfires here and there.
So on the global tariff front, I think the news are positive. The developments are moving in the right direction. So a month ago, around this time, the markets were gripped with the volatility surrounding the tariff announcement. Since then, every incremental news has been uh, de-escalatory, if we were to use that word in this context. It has, from all sides, including Trump himself, there is a dial back of the positions after the initial um, uh, initial, ramp up between tariffs between US and China and so on and so forth. So we had this week itself, first of all, UK India free trade agreement announced. We had a deal with US UK now. I think that sets the tone, and that sets the it's a precursor, I think, to many such deals that you're going to see between US and other trading partners. And then that's a positive from where we were a month ago. We've come a long way on the global tariff front, and that is a positive backdrop for Indian equity markets as well. The global backdrop ought to be, I think, positive over the coming few months, particularly as tariffs were the primary concern over the last several weeks.
All right, but Prashant, from investor point of view, yes, of course, when we get to interact with some of the investors right there, there has been a bit of a nervousness within the retail investor pack. But since market is looking forward to the developments, given the fact that maybe, and we hope for some bit of a resilience in the times ahead, which are the pockets there where you are finding margin of safety at this point in time?
So opportunities are across sectors. We historically have tended to have higher allocation and that's no different today, in sectors such as financials, healthcare and consumption, as well as technology. And that is the case right now as well. And this is more from the perspective of where we see bottom-up stock selection opportunities, rather than some top-down view on which sector would do well versus other, which we don't think works in any market. It's a zero-sum game, but it is really identifying the best opportunities within each sector.
As an India investor, you don't want a neighborhood in turmoil. Captain Gore was just talking about as to how politically sensitive as well is Pakistan getting. And there's so much happening around us. What with the China-US dynamics, China-India dynamics, the world is in a flux right now. But as an India investor, how worried would you be with the turmoil that's happening in our neighborhood and right across the border?
Certainly, Asha. The world is always in flux and things are always uncertain. It's just that at the point in time that you are in, it seems to be more uncertain than it was at any other point or most of the times in the past. But if you put yourself at any point over the last few years, the world is always very uncertain. But to the point that you're making about the neighborhood, yes, global investors, would want to see that the country is in peacetime or business as usual. It is not common to have, in today's day and age, such conflicts. While there are a few places that such conflicts are going on, but those places aren't the ones where global investors typically have big exposure. Yeah, be it Russia, Ukraine, or in the Middle East. These are not places where the global investors have big exposure. India is obviously where global investors have a very large exposure compared to at least these places. So there would be naturally desire for everyone to see normalcy return. But it is what it is, and they would be watching carefully, as would everyone in India.
Yeah, absolutely. This is a developing situation. It will resolve sooner or later, and we're hoping for that.
If you like this video, then like, share and subscribe to ET Now.